despite the kind of bearish day we had yesterday. Well, at least bearish from open. So almost all the gains on the day lost. Obviously, the bounce off of like the 67.80 level failed. We continued to push down through that support into the end of the day and closed. Well, what, like 30 BPS under the expected move, which is kind of wild. Also below gamma neutral, getting fairly close to delta neutral, which is down at like 6,700. And that, with the rising implied vol, I would say that's probably a very reasonable downside target. Obviously, VIX up 10% today. VIX 3-month up 4%, VX up 4.34. So everything moving up on vol. On ES, we did get pinned to the 68.12 level, and I do think the upside of this is still slightly bullish. But we tried to retest the prior week close and failed. So we may see another leg down to a more significant level, like 67.19, before pushing back up to retest those more bullish levels. Obviously, some of this is news dependent, but I think a lot of it's also collateral dependent. We'll get into that in a second. Dollar up, yields at the top end of the curve, kind of flattening out after rising over the last couple of days, but the short paper is really what's interesting, especially with the 3-month throughout the intraday still well above the federal funds rate. That's strange. Like the effective federal funds rate's 3.75 right now, and we got the 3-month yield at like 3.9, which is showing that people are selling quite a lot of their short paper in order to get cash collateral. Correlation continued to break down on the 1-month, where it's starting to pick up pace and rising, and then we're seeing that also turn around on the 3-month as well, although not quite as much as it was earlier today by the end of the day, so it did level out a bit. Commodities, not down too bad, but big losses in precious metals. Copper, oil down about 1%, still floating above $60 a barrel. Agricultural commodities down. Most of that probably due to the rising dollar. 3-month correlation up, but still not a lot of movement in bond volatility, which is kind of surprising. It makes me think we're going to see a spike in bond volatility. We almost hit positive forward yield on volatility today, but came just a little bit short. I think the high for the day, maybe, went like 2 points positive before we started seeing vol get shorted back down again, and ended end of day at negative 4.25%. The back end of the carry, the top end of the short end of the carry, both deleveraging a tiny little bit, but not very much. We're seeing skew continued to drop yesterday after bouncing back into the weekend. Breadth doesn't look good. We're starting to see stocks over their 50-day moving average falling below stocks over their 20-day moving average, and pretty big downturn in stocks over the 200-day moving average, going from about almost 60% down to 53% now. Correlation for volatility has been falling the last 3 days, but still staying around 84%, and vol keeps moving up on that. So I would say that they're pushing back a little, but the desire to sell vol here seems to be fairly limited. Fed fund futures pretty flat, not much going on there. 10-2-year picked up a little bit. SOFR spread remains at about 23 points, which is still quite wide. It did start closing a little bit today. But definitely not nearly as much as you would expect. And that spread's probably still applying quite a bit of pressure. Yeah, and then leverage up on the day. Out here, we're getting very close to the 20 MA test, which is down at 67.47. If we slip below the 20 MA, honestly, my downside target would probably just be the 50 MA at 66.50. I'm not really sure the 30 MA is all that important here. Major levels to watch: 67.64 and 66.99, which is also the top of September's price action. So 6,700 pretty important. If we do lose that, it definitely opens up quite a bit more downside. So watch those levels. If we're looking for a bounce, I mean, obviously back above 68.36. And we still have a gap to close to the downside at 67.38. So that might kind of be worth watching. Is that where it's a little, yeah, it's right in between the 20 and the 30. Is Upstart gonna hang in there? I don't know why they would. I mean, this kind of like low liquidity, tight credit shit that's going on right now is not good for Upstart at all, by any means. It's very, very bad for their business model. So, yeah, looks like shit. Also, yeah, look at that. Earnings. Was that tonight? Or was that this morning? Oh, that's tonight. That's not great. SMCI earnings this? Really? Hmm. Well, everything's dog shit. Awesome. All right. I'll see you guys tomorrow. Later.